Hello and welcome to this week's edition of Wealth After Work, the show bringing you to and through your retirement. I'm your host, Kristen Oakley, and joining me in the studio are two members from Abundant Streams Capital. We have Josiah Grauso. He is the Vice President and Senior Financial Advisor, and Senior Financial Advisor Taylor Munoz. We've got a great show for you today. The title of this episode is From Panic to Peace, the Retirement Risk Challenge. Here's what we want you to be thinking about during today's show. Are you playing it too safe, or are you taking on too much risk with your hard-earned wealth for retirement? Well, you're going to want to stick with us. We're going to help you take the challenge that can change the course of your retirement for the better forever. Josiah, Taylor, so good to be here with both of you this week. What's going on in your world?
Oh, well, panic to peace. If people work with us, then we make their retirement a piece of cake.
Oh, there you go.
I was going to say panic to peace. I mean, we both have kids at home, and it's always either panic or peace. And I'll be honest, it's almost never peace. It's almost always panic.
Yeah. But, electric outlets, all those things.
Oh, gosh. Well, I know that you guys are so busy meeting with folks coming in to meet with you. And oftentimes they have that panic mindset, right? I mean, this is why they know that they need help, which is great. And what I love is that you help move folks through this process from that panic state to peace with their retirement savings. So that's what we're going to be talking about today. We're also going to be sharing with you a free online interactive assessment that you can take during this show, which will help you properly assess how much risk you should currently be taking with your investment. So you're going to want to stick with us. We've got a lot to cover today, and we hope that more of you will be able to move over from the panic side of things to the peace side of things, even if you can't do that with your small kids at home, right? All right. Well, Josiah, let me start with you. Why is it so important for folks to really understand their risk tolerance, especially as they're transitioning into retirement?
Yeah, so here's the thing. What we find is that most people, their expectations don't really match their reality that they see, okay, or maybe the risks that their portfolio is taking. I can't tell you how many times we have somebody come in and sit down with us and they're like, oh man, I'm so risk adverse. I'm really conservative. I don't think I can stomach more than like a 10 or 15% drop down in the market. And so we sit down with them. We go over what's called our retirement income analysis. And one area of that is a stress test. And we take a look at seeing, what their risk actually is. And oftentimes, if there are bad market conditions, they could lose upwards of 30 or 40% of their portfolio. And so here's the thing. This is the danger of staying in this growth-oriented accumulation mindset, especially the closer to retirement that you get, because we don't have as much time to overcome some of the losses of those major market drawdowns. And so here's the thing, Kristen, especially earlier in retirement, major market losses can completely derail the next 20 or 25 years of your retirement. So it's so important to make sure we're taking a look at preservation and looking at protecting against that market drawdown. This is something that we talk about called sequence risk. It's the most devastating risk a retiree will face, meaning as they're starting to draw out their money and the market comes down, it compounds those losses. Let me kind of explain to you with a client of ours that we had that came in to see me not too long ago. This was Becky. She came in 2019. She's 72 years old. She's from Tobyhanna. Unfortunately, Becky lost her husband, Richard, about a year earlier. When she sat down with me, she told me, my husband, he was a big risk taker. I really am not that much of a risk taker, and I'm more conservative. We did the retirement income analysis. I did that stress test with her, and it found out she could lose up to 43% of her money. The great thing that happened, though, we were able to make some changes for her. We were able to make sure the portfolio aligned a little bit more into her risk that she felt comfortable with. And then that next year, we had COVID happen where there was a lot of panicking that happened in 2020 from there. And so that was great. And so for kind of our audience at home, this is where we're really going to take a look at this retirement risk quiz that's going to be available for you that you have. This is really going to see where your comfort level is truly aligned with maybe the risks of your portfolio. It's going to give you this concrete risk number that we have, just to let you know exactly where you stand. It's going to be a starting point that you see to see if there's any adjustments that maybe you need to make. And here's the best part of all, Kristen. It's completely free. Yes. So if you want, at the very bottom of the screen there, it's aseriskquiz.com, or scan that QR code. You can do that right now, or maybe at the end of the show if you want to. It's a great tool and only takes a couple of minutes.
Yes, and I love that we're providing this for folks, because I think awareness is the first step, right? And I know that you see this consistently, where folks are surprised to find out that they are misaligned, meaning that their risk tolerance does not currently match up with how their money is currently being invested. So we encourage you to visit aseriskquiz.com. Again, completely free. You can do this during the show, or write it down, or click that QR code. We know your smartphone is hanging out with you. So why not take advantage of this opportunity and start this process to see where you stand with your own risk tolerance. Taylor, once someone realizes that they are misaligned, right, that there's this disconnect and there's this mismatch between how much risk they're comfortable with taking and how much their investments are currently taking on, what should they do about it?
Well, they have a choice, ultimately. Again, if you come to us and you are heavily positioned for growth, taking a lot of market risk, there's an alternative, and that's an income-centric approach. So, as Josiah mentioned, we first begin by doing the assessment. What's your retirement income analysis, and we pair that together with the risk quiz that we've provided for folks to take part in. And when we take those two things together and we've identified their risk tolerance and we've looked at how are they actually positioned, then we work towards alignment. And with alignment, we need to make sure that we know, exactly what our risk tolerance is, so we're not surprised.
Right.
And then also make sure that the strategies that we're putting in place prioritize income first. Because when we make that shift towards income, we're looking at strategies that weather any market condition. It's less about timing the market and when's the right time to buy or sell or try to beat the market. And what is it that we can do that provides predictable, certain income, no matter the market conditions, no matter the ups and downs. Now, I think what we find with a lot of folks is that when they come in to see us, I have a lot of folks that say, well, I'm okay with a little bit of risk. But I think what they really mean, and what we found, I think, over time is, we're okay with little risk as long as the market continues to go up. Right? I mean, we all love passing those benchmarks on the way up. My portfolio is worth 100,000, 250, 500, maybe $1 million plus. But then we don't like to say, well, I had $1 million and now I have 800,000 and now I have $500,000. We don't like it the other way down. And so really what we're looking to do with folks is to make that proactive move to lock in your gains and protect what you have and mitigate your risk before it actually happens. And so that's really what we're looking to do and accomplish with folks, is identify proactively what is your risk tolerance, reposition for dependable income with more certainty and predictability built in. And then we now have a strategy that weathers all conditions. We don't have to have the anxiety and stress of checking our statements and logging in online and seeing where are we at day to day. We want to take that stressful piece out of the equation. And I think it's important for folks to understand at home, on average over time, we have a market correction every 2 years. That's a loss of 10% or more. We have a bear market every 6 years on average. That's a loss of 20% or more, right? And so if we're planning on a long and healthy retirement of 30 or more years, that's a whole lot of corrections potential for bear markets. We have to diversify in such a way that we're not reliant on the ups and downs of the market for the necessities that we have in retirement and to fund the experiences and dreams that we want to do while we're retired. So if you're not sure what kind of risk you're taking, you're not sure how aligned you are with the risk that you're actually taking within your portfolio, you need to reach out to us. We encourage you to reach out. We'd like to provide to you our retirement income analysis. It's going to look very specifically at what kind of risk are you taking today, what kind of income return are you getting, and how can we reduce that risk and maximize your income with the exact same assets that you have. So please give us a call. Call us at the number on the screen or scan that QR code, and we'd be happy to get that process going for you.
Wonderful. Taylor, Josiah, thank you so much. I'm excited for more folks to get connected with you and get realigned, right? Because that's where the real magic can happen. So again, if this is resonating with you, if you want help making sure that your risk tolerance is in alignment with how your money is currently being invested, we encourage you to reach out to the team of ASC. They are here to help and serve you. That number to call to schedule your complimentary retirement income analysis is 844-918-4867. Or again, you're welcome to grab your smartphone, just click that QR code, and that will get you connected as well. When we come back, how do you shift from that growth mindset to more of an income mindset? We'll answer that when we come back.
Hi, I'm Josiah Grauso with ASC Financial. When markets are up, risk feels great. When they're down, it can feel terrifying. That's why having a clear view of your risk tolerance ahead of market changes may support more informed decisions. Our risk quiz is a quick, easy way to find out what your current sentiment is towards risk and whether it aligns with your retirement goals. Most people have no idea how much risk they're actually taking until it's too late. Are you more conservative than your portfolio, or taking on too little risk to grow your savings? The quiz walks you through a few simple questions and gives you a risk score you can compare with your current investments. This could be one of the smartest steps you can take to bring clarity and confidence to your retirement strategy. Scan the QR code or go to ascriskquiz.com and take the free risk quiz today.
Welcome back to Wealth After Work. I'm Kristen Oakley here with both Josiah and Taylor from ASC Group, and we are so glad that you're joining us today. If you're just tuning in, we are talking all about the importance of understanding your risk tolerance. We are calling this episode From Panic to Peace, taking on the Retirement Risk Challenge. And again, if you've not yet visited this awesome free online interactive resource, we're going to put it for you here on the bottom of your screen. We encourage you to visit ascriskquiz.com. You can also click that QR code. It'll take you a couple minutes to fill out, but really this will give you an honest look at what your risk tolerance is, and therefore then folks know how their money needs to be managed accordingly. And you did such a great job in the last segment explaining why a lot of folks have a misalignment, right? Part of the misalignment comes with not shifting the right mindset for where someone is in their current stage of retirement planning. So what we want to do now is share with you why it's important to shift from a growth mindset to an income mindset. So Taylor, I'll start with you on this one. Why is it that retirees need to think so differently when they are approaching this new phase of life?
Yeah, well, when you're working and you have a time horizon, a significant roadway before you actually retire and you're actively contributing, that's a lot different than when you say, okay, I'm going to stop working and now I'm going to pay myself a paycheck from what I've saved, right? So we say, when you're actively working, that's a set it and forget it strategy. Just time is on your side. Over time, the market goes up. But then once you retire, you don't have the same propensity for risk. You don't have the same ability to, take time to recover. We look at, there's a period of time from the year 2000 to 2013. And, in 2000, what happened? We had the dot-com bubble burst followed by 9/11. Market went down 50%. Between 2002, 2003, and 08, the market went back up 100%, back to where it was in 2000. But then we hit the 08 financial crisis. Market went back down almost 60%, but by 2013 had come back up 150% back to where it was. So if we're working, that's okay because we're contributing. We don't like it, but we're contributing, we have time. But what that meant was that if I retired around that time, for 13 years, the market was underwater. And so I don't have the same, if that happened again and I'm retired, the first 15 years of our retirement are our healthiest years to do what we want to enjoy. If something like that happened, we'd be spending most of our earliest, healthiest years retired trying to recover to feel like we have the ability to spend the money that we saved for retirement. So it's so important to begin making that pivot. If you think about it, like while you're working, you're feeding your retirement portfolio the whole time. When you stop working, you're taking from it. So it's two completely different things.
For sure.
And it requires significantly different strategies to adjust. You can't do the set it and forget it anymore. You need an intentional approach that's designed for income. The other thing that that I actually found when we're preparing for this segment, when you're working, if you think about it, your income that you're bringing in is replenishing your savings every 2 weeks, right? So every 2 weeks, I can pay my bills, spend this money because I know that in 2 weeks my next paycheck's coming,
right?
And then I can pay my bills, cover what I need, buy my groceries, and then my next paycheck's coming. And so that doesn't happen when we're retired unless we employ the right strategies to ensure that we have that predictable stream of income. It's right in our name, Abundant Streams Capital Group. We want streams of income, not just a pile of money that depletes. We want a predictable, certain stream of income.
Yes, for sure. So what kinds of strategies make sense for creating these types of abundant, reliable income streams?
Yeah, Kristen, we really emphasize on income producing strategies. Okay, these are things that are like dividends and interest and things that we can count on. Okay, I like to talk about an equation that probably should be talked about more in our retirement community or with our financial industry that's not done enough. And that equation is total return equals income plus growth, because assets can be on one side or the other, focusing on growth and on income. And there's a whole universe of income producing assets. But just to simply answer some of your questions, one of the things we look at here are things like dividend paying stocks, something that's going to provide ongoing cash flow. Then we've got something that generates interest like bonds or multi-sector funds that we've got, structured notes. Again, these are going to be things that really produce steady interest. Or the other area is maybe annuities that can provide a guaranteed paycheck for life that we can't outlive. And so I talk about an analogy here of, and I think we've talked about it before a couple times in the show, but talk about one specific asset class to really understand the difference between this G and this I. And that's in real estate. Okay. So with real estate, I could be on either side. Let's say I have $350,000. I buy a house and I'm going to be looking at flipping the house for a profit, for a gain. That would be like the growth side. Okay. My goal is in 6 months, a year, that $350,000 house, I'm now selling it for $400,000, $420,000. Is that guaranteed? No. Maybe I only get $360,000 or $365,000. Or let's say the real estate market's depressed and now it's only worth $320,000. And I need some of that money to start paying my expenses. Now I'm going to have to start selling at a loss. On the other side, though, we look at it, let's take a look at real estate as if it was for income. That would be like a rental property. Same $350,000 property, but now instead I'm getting rent of like $2,000 a month, $24,000 a year. And can that house still appreciate in value? Yeah, it could go up to $375,000, $380,000. I'm still getting my $24,000 a year. But if the house drops down the value to $320,000, I'm still getting my $24,000 a year. So I'm not having to do this panic selling. Okay. And that's why we talk about here is that we don't have to sell principal prematurely in order to get that income that we have. We want to focus on this renewable income stream. And that's really the idea, is we want this portfolio to replace that paycheck that we've got. And so this is exactly what our complementary retirement income analysis provides for you at home. We're going to really show you how, if you are growth oriented, why it's going to be really more important to focus on income and income producing assets. We're going to show you how much your current portfolio is generating in income and what it could realistically look like if we focused on maximizing income. So I'm going to encourage you, if you want that complimentary retirement income analysis, pick up the phone, give us a call at that number below. Let us sit down with you and go over that analysis for you.
Josiah Taylor, thank you so much. That number to call is 844-918-4629. 888-4867. Or again, you're welcome to grab your smartphone. You can scan that QR code and that will get you connected as well for you to schedule your very own complimentary retirement income analysis. Don't go anywhere. When we come back, I'm going to be asking Josiah and Taylor about how they help their clients stay the course despite volatile markets. You're not going to want to miss what they have to share with you right after this.
Our money goes through 3 phases throughout our lives. We accumulate it, we protect it, and then we distribute it.
Most people entering retirement, they're taking way too much risk.
We take a look at where they currently are. The positions and the accounts that they have, is that enough? Is it generating enough income for them in order to achieve those goals and aspirations?
A successful retirement basically says, I am giving permission to spend money.
It's being able to do everything you have in retirement without worrying of, do I have enough money?
You know, it's us focusing on what are the things in retirement that we want to do, that we dream of doing, that we never got to do while we were working.
Being able to spend more time with their grandchildren, be able to travel.
At the end of the day, we don't want a one-size-fits-all for retirement. We dive into, an individual's needs. It's really a forensic approach to income planning.
Welcome back to Wealth After Work, where today we have been discussing how to go from panic to peace, understanding retirement risk and the shift that needs to occur, especially as you approach and enter retirement, that red zone of retirement that we talk so much about, right? That 5 to 10 year window of time, both before someone leaves the workforce and after. Yes. And what's interesting is we know that volatile markets are going to happen. And one of the biggest reasons why people panic is that they can't control the volatility, right? We know the market's only going to do one of 2 things. It's going to go up, it's going to go down. After it goes down, it's going to go back up, et cetera, so on and so forth. But we don't know when that's going to happen. And that can breed a lot of fear, a lot of insecurity. Of course, the news, the media doesn't help the situation, right? You talk to your friends, they're panicking, they're selling. So we have to help folks stay the course. And this is something that you're passionate about doing when you build a retirement income plan for folks. You have these abundant streams of income coming in for them. Talk about how you help people stick with their plans during market downturns, because that's really challenging to do.
Yeah, Kristen, here's the thing. Human nature goes against us in this area, okay? We have something called loss aversion that we have, and that's that really the pain of losing money is stronger than the joys of when we are getting those gains and the value of the assets are going up from there. You also mentioned media headlines. We love to talk about all of the disaster things that could happen. And so the market's going down, that's on every news channel, and people start hearing some of those fears that come through. And then finally is just the panic of our neighbors, our friends. Everybody's talking about, and they're starting to sell, and they're, oh, I don't know if they're selling, maybe I should be selling too. Here's the thing, the real problem is we show a lack of confidence in our portfolios, or in the strategies that we have to help kind of avoid this. And here's the thing, Kristen, when your strategy is not clear, fear takes over.
For sure.
Okay?
Yep.
And we don't want to make these decisions based on emotions at this point. Okay? Because a lot of times that can compound some of our losses that we see. And that's why it's so important to make sure you understand your risk tolerance, okay? It really sets a realistic expectation that we have. So those market downturns maybe aren't as painful because we're already prepared and we understand what that's gonna look like. And then the other thing is, we really want to make sure that that risk tolerance is aligned that we have, and how much loss can we actually stomach. And then we're less likely to do that panic selling. And that's why it all revolves around making sure we have a predictable, reliable, stable, and renewable stream of income to really minimize those real panic moments because I know I'm getting that paycheck each and every month.
Yes.
And it doesn't change.
Right. And I think that's the key, right? Folks want that certainty and security to know they're going to be okay, to be able to tune out that noise. And that's what you really pride yourselves on doing, is building these solid income plans. Folks know their needs are going to be met, not just your needs, but your wants in retirement as well. And so that is a huge game changer when folks can have that confidence. Now, we've mentioned a few times today this awesome interactive assessment, and it's there for you on the bottom of your screen. If you've not yet taken advantage of this, we completely encourage you to do so. It's free for you. ASCriskquiz.com. You can scan that QR code. Taylor, I'd love for you to share with our viewers why this is such a valuable tool and what's going to happen after they take this assessment.
Sure. Well, I mean, it's certainly a helpful way for folks to establish a benchmark for what their risk tolerance is. And certainly for us, it works best when you pair that analysis, which you can certainly take, and it's a helpful tool on its own. But when you take that risk assessment and you pair it with the retirement income analysis, we can use both of those tools to ensure that you are in alignment. And I think alignment is really a big word that we've used that kind of defines a lot of this episode. The reality of how you're invested needs to match your actual risk tolerance.
Yes.
And when we go through that process and assess your risk tolerance and make sure that we are not taking unnecessary risk, right? 'Cause it's not always about taking no risk. It's about not taking unnecessary risk.
Right.
When we go through that process, now it encourages more long-term thinking, less knee-jerk reactions. We're often having to counsel folks like, hey, and again, we do strategies that ride out whatever market condition exists. We try to have strategies that weather those downturns in the market. But if there is a downturn, we want to make sure that we've already done the proactive work of making sure that we're taking the risk or not taking the unnecessary risk that we originally talked about. And so it gives us more confidence or gives our clients more confidence as they look at their accounts or their different strategies that they've put in place. And they can know that, hey, I already prepared for this. And when we go through those periods of market volatility, we proactively speak with the folks that are, that we work with and the clients that we have, but, our phone's not necessarily ringing off the hook because we take those proactive steps with folks early to be able to make sure that we've already prepared for it before it happens.
Yes. Yeah.
For the folks that are watching at home, maybe you still aren't sure what kind of risk you're taking, whether you are still positioned for a lot of volatility or whether you've done everything that you can to actually maximize the income that you can draw from what you've saved for retirement. So we encourage you to reach out to us. We'd love to lead you through the process of that retirement income analysis. It's absolutely complimentary, no obligation on your behalf, but we want to do that risk assessment for you and really make sure you have confidence in the strategies and plans that you've put in place that will carry you through the rest of your retirement.
Wonderful. Taylor, Josiah, thank you so much. And thank you for joining us. 844-918-4867 is the number to call to start your process today. Be blessed, live abundantly, and we look forward to seeing you next time here on Wealth After Work.